Today on the Wall Report, I'm your host, Greta Wall. The major indices are sliding further today after the market suffered its worst day since 2020 on Thursday. And the drop comes despite job growth coming in hotter than expected in April. The Labor Department reporting the U.S. economy added 428,000 jobs last month, beating expectations for 400,000. And although that was a strong top-line number, other metrics in the report did fall short. The unemployment rate held steady at 3.6% versus expectations for that to fall to 3.5%. Average hourly earnings did rise just 0.3% monthly, below expectations for a 0.4% gain, and wages were up just 5.5% year over year, still lagging far behind inflation. Meantime, the labor force participation rate fell in April by 0.2% to 62.2%. That's tied for the lowest level of the year and still far below pre-pandemic levels. And it's not just the stock market falling. Cryptocurrencies are tumbling too. Bitcoin is down 6.6% over the past 24 hours, currently sitting just under $36,000. Ethereum is down about 6.5%, falling under 2,700, while XRP is below 60 cents and Dogecoin is under 13 cents. The crypto market has tracked closely with the stock market so far in 2022, a change from when the two markets used to move more independently. Some experts see Bitcoin moving lower in the days ahead, saying it lost a key level when it fell below 37,500. But the energy market is looking different than Wall Street as oil prices continue to rise on persistent supply concerns. West Texas Intermediate crude futures are up more than 2%, topping $110 per barrel, while Brent crude futures are rising about 2% to over $113 per barrel. The gains come despite new concerns about global economic growth, as the market focuses instead on the EU's impending ban of Russian oil. The bloc is said to be tweaking that sanctions plan to get some more hesitant countries on board, but it would still include a complete ban of all Russian oil products by the end of the year. And it's another busy day for earnings on Wall Street. DraftKings shares are flat today, falling a bit despite the company beating Q1 expectations and hiking its full-year guidance. The online sports betting company reported an adjusted loss of 74 cents per share on $417 million in revenue. That was better than analyst expectations on the top and bottom line. DraftKings forecast full-year revenue between $1.93 billion and $2.03 billion, up from its previous guidance for $1.85 billion to $2 billion. The CEO said they are not seeing any impact from inflationary pressures on customer demand. Meantime, DoorDash shares are slipping today after reporting a steeper loss than expected, but record high numbers in the first quarter. The food delivery service did report a loss of 48 cents per share on revenue of $1.46 billion. That was steeper than analyst expectations for a 41-cent loss, but better than estimates for revenue. Revenue was up 35% year over year as the total number of orders jumped 24% to 404 million. That's a new record and the first time orders have ever topped 400 million. In a letter to investors, the company said it now holds 57% of the food delivery market in the U.S. DoorDash now plans to invest in other categories like groceries, alcohol, and retail deliveries. Now, Sweetgreen shares are down today despite reporting strong Q1 sales. The salad chain reported a loss of 45 cents per share on $102.6 million in revenue. That was worse than analyst expectations on the bottom line, but better than analyst revenue expectations as sales jumped 67% year over year. Now, same-store sales rose 35% in Q1 as more customers visited the chain and Sweetgreen raised its prices. Prices were up 10% compared to a year ago. Sweetgreen reiterated its 2022 forecast and said it plans to open 35 new locations this year. Now, Virgin Galactic shares are tumbling about 10% today after the company delayed its first commercial space flight. The space travel company did report a loss of 36 cents per share on $319,000 in revenue. That was a steeper loss than analysts were expecting, but revenue did top estimates. Virgin Galactic delayed its first commercial space flight to Q1 of 2023, citing escalating supply chain and labor constraints. The company previously announced plans to have its first 1,000 customers onboard flights to space later this year. Now, Block shares are down slightly today after missing Q1 expectations. The Square parent company reported adjusted earnings of 18 cents per share on $3.96 billion in revenue. Now, that was short of analyst expectations on the top and bottom line. Block generated overall gross profit of $1.29 billion, also shy of estimates. The market pays closer attention to that number than revenue, as the revenue line is often swayed by high-cost initiatives like Bitcoin trading. Now, gross profits from its Cash App mobile wallet jumped 26% year over year, while Square's gross profit overall surged 41%. Block's CFO said they have seen the platform is resilient through times of uncertainty like the pandemic and the current inflationary environment. Now, Lucid shares are also slipping today despite reporting a narrower than expected loss in the first quarter. The electric automaker reported a loss of 5 cents per share on $58 million in revenue. That was better than analyst expectations on the top and bottom line. Lucid delivered 360 vehicles in the first quarter and said it has more than 30,000 reservations for its flagship Air sedan. The company did announce it is raising prices, though, as costs continue to soar. Lucid will honor current pricing for existing reservations and those that are made through the end of May. But then starting June 1st, pricing on the Air sedans will rise 10% to 12% depending on the trim level. Lucid did maintain its full-year production target for 12,000 to 14,000 vehicles this year. Now, Zillow shares are falling today as the company's weak outlook overshadows a Q1 earnings beat. The real estate giant reported adjusted earnings of 49 cents per share on $4.26 billion in revenue. That was better than analyst expectations on the top and bottom line. Zillow continued, though, to wind down its property investment business in the quarter, selling more than 8,900 of the homes it owned. The company stopped purchasing homes on January 31st and says it has about 1,300 homes left to sell. Just 100 of those are not already under contract. But the Q2 forecast did come in weak amid uncertainty about the real estate market. Zillow expects revenue between $903 million and $1.03 billion this quarter versus analyst estimates for $1.83 billion. Now, Peloton shares did hit a fresh all-time low in today's session as investors lose hope the company can successfully turn around. The stock bottomed out at $14.70 per share, sharply lower than the IPO price of $29. This drop comes ahead of Peloton's Q1 earnings early next week. That will be the first earnings report under CEO Barry McCarthy. The Wall Street Journal did report Thursday as well that Peloton is targeting potential investors to take a 15 to 20% stake in the business. Such an investment would provide fresh capital to Peloton, but a company spokesperson declined to comment. And next week is another big one for the market. The focus will be on inflation, with the April CPI and PPI both scheduled to be released. So I hope you have a great weekend, and I'll see you back here next week for all of those details.